Moving on to markets now, and on Tuesday I was joined by DTN analyst Todd Hultman, and he recently wrote an article for DTN explaining the ag market's response to COVID-19 and how different sectors of ag are simply backed up as the country deals with the pandemic. We began the interview by getting his take on that and seeing if we may be turning a corner.
I'd say we did get a little more bullish tone over the weekend, thankfully. And it appears that people are getting more active about getting out into the economy. Wall Street Journal had a very interesting story, and they had different statistics showing that to be the case, that we're starting to actually travel a little more, get out on the roads more, and just in general, get back to life a little bit more. So it's a bit encouraging. Obviously, it's a very tough road that we've been on to start 2020 with. Who would have ever thought we'd be facing a global pandemic this year? And I think it was very tough to anticipate just how hard it would be on the demand side of our grain markets. And so when I refer to them as constipated ag markets, just about everywhere you turn, demand is just backed up. It's been hard to distribute the goods out to where it gets needed. And that's true whether it's ethanol or grain or livestock products. And it's just been hard at every turn.
And I also think it's worth noting that in your article, you particularly mentioned soybeans as having the best chance for easing the strain on other crops. Expand on that a little bit.
Yeah, Troy, the historical trend of soybean demand has just been fantastic. It's been the real leader in growth for many decades now, and that continues to be true as the world desires more more protein on their plate. And of course, soybean meal is a big market part of making that happen. Even when China was dealing with African swine fever and losing their hog herd, world soybean demand still hit record levels year after year, and USDA expects that to happen again this year. Now, we need more confidence here in the US market that we have access to that growing soybean market so that we're not planting 97 million acres of corn and creating big piles of corn that's going to be hard to move in the fall. We need a healthier balance, and we need more confidence that we do have access to a big international soybean market that keeps growing for us.
And I was also reading an article earlier this week about how Brazil's coronavirus cases have quadrupled in May. So one might assume that the instability there may really disrupt their economy, including their ag markets. Do you have an opinion on that?
Yeah, anytime we hear anything negative, potentially for Brazil, it really perks up our ears because obviously they're our number one competitor in both corn and soybeans. And you're right, they seem to be named as the latest hotspot for coronavirus cases at the moment. And that is a big concern throughout the country. The question comes down to, will it close their ports? And I don't see any sign of that happening yet. And of course, they have a big financial interest to keep those ports open and going. So I wouldn't get too optimistic or bullish on prices yet because of that situation, but it's certainly worth monitoring. It is very much an important issue.
And this time of year, weather is always big in the news. So how's that helping to shape the markets right now?
Well, as far as corn and soybeans go, as you know, the planting pace is off to a fantastic start. And we're seeing corn and beans put in the ground like crazy. And what a 180-degree difference it was from last year. So as far as corn and beans go, it's off to a very good start. We got more rains over the weekend. There's always going to be some haves and have-not areas when it comes to precipitation. And we'll have to monitor as the season goes. But overall, we have to say good start for the corn and soybean crop. On wheat, which is has more of a world attention on crops, there are concerns about dryness in France and Germany. Southern Russia has also been named as a possible concern, but Ukraine and Southern Russia both have gotten beneficial rains lately. So overall, the world wheat crops appears to be off to an okay start with some issues to watch.
All right, Todd. And finally today, we'll end it with some advice for the folks watching. What do you want to leave us with today in terms of selling strategies or risk management opportunities that we might want to think about to help us move forward?
Yes, well, this is normally the time of year we'd like to look at some nice pricing opportunities in corn, and soybeans comes typically from here to about a month later. But because of coronavirus, our seasonal trends have kind of been turned upside down on their heads. So right now we see a corn situation where funds are heavily short. And in this market, I just don't think it's going to pay to sell down here at these lows. Even if we do get a big crop this year, we ought to get a little better pricing opportunity in the summer. For soybeans, again, we have that big demand question mark, but we don't have the big crop prospect in the fall that we do with corn. So I think in soybeans, we have even a little more time to work for a better forward selling opportunity in 2020.
Appreciate Todd for joining me this week, and we're also going to put a link to the article he wrote that we referenced in the interview on the Market Journal website. I also wanted to get a quick word on the cattle markets this week too. Mississippi State University livestock economist Josh Maples fills us in on what he's tracking in the futures market and what we need to be watching for.
I think the general volatility continues to be the big thing to kind of pay attention to. And we certainly aren't in that same environment that we were when it first broke, when we were just seeing sharp, limit up, limit down, limit up, limit down. But yeah, I'm watching the nearby contract, of course, looking at the June contract for live cattle. But I'm also really paying attention to those further out contracts because, what happens with processing over the next month or next couple of weeks or month is going to have an impact on, what we're looking at in terms of cattle in feedlots and what processing might look like later in the year. So I think there's a really interesting question right now, not only figuring out what's going to happen in the next few weeks, but how what happens in the next few weeks impacts those further expiring contracts. So I'm also keeping a close eye on the fall contracts.